Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased price action analysis. And holy moly donut shop. What a choppy day we had, guys. Very choppy day. We didn't get much follow through on many setups. Alright. The morning it opened around 411.85. It opened between my 412 to 411.5 zone, the yellow lines here, which I wrote here in the Discord, updating my group, trying to keep us on the right side of the track, the right side of the trade, I mean. But yeah, we opened up with a breakout of 412, and what do you know? Gave us a false breakout setup, all right? It was, fake out, cut loss. You might have to play the false breakout, switch over sometimes. But yeah, the first setup and the first and the second setup of the day, pretty tricky. But we did have to move to the downside, going as low as 410.7. I had support at 410 to 410.5 zone, didn't quite hit it. And then from there, man, we just chopped for the whole day. We recaptured 411.5, hit 412, broke down 411.5 just to recapture it. Had a false breakout over here at 412. All right, and then from there, from that false breakout, rejected 412 as resistant and was able to find some downside. But I'm gonna tell you, in real time, it was very choppy, tough to trade, and this breakout happened at the very end of the day, out of nowhere. Okay, so whether you had a green day, red day, or break even day, days like these, I like to just leave behind me and just move forward. Okay. So we do that by looking at the daily chart and see what's going on. Let's check out the context, right? Now the setup, we do have an interesting setup here, okay? It's called the double inside day candle. The regular inside day candle, it's when a candle is within the range of the previous day candle, and it's usually a sign of consolidation and chopping and building strength to get the breakout or the breakdown. And right now we have a double inside day candle. Okay, so today's candle, the trading range for today's candle was inside the range of yesterday's candle, and yesterday's candle, May 15th, is inside the range of May 12th's candle. All right, so we got a double inside day candle. These setups are usually rare. They don't happen that often, but they do happen. And it's usually a sign of extreme indecision. All right. Market don't know what it wants to do. And it's very annoying to trade it. However, I don't want to get y'all's hopes up. But based on this trade setup, the fourth day usually gives us the move. All right. It usually makes a decision. Based on this setup, on the double inside day candle setup, we usually get a decision on the fourth day. So I'm hoping with all my sheep heart and soul that this market can give us a move tomorrow. Okay? So in today's video, I'm just going to give you guys the levels to pay attention to and the plan of action. Okay? So as far as the bull case go, we still got this trend line right here. Okay? This blue trend line connecting May 1st. May 10th, May 15th high, okay? Multiple tests. If we go on the 4-hour chart, you'll see more tests of this trend line as resistant, okay? Breakout level for tomorrow is 412.8, okay? Now, if we go based on the double inside day candle, it has to take out the range of the previous day candle. In this case, the grandmother candle, okay? If today's the child candle, yesterday's candle's the mother candle, and then Friday's candle is the grandmother candle. The grandmother candle's high is 413.6. So SPY needs to break out of 412.8 and 413.6 to be bullish, putting 415 and higher targets in play. There's actually a gap at 415.5-ish. All right, there's a gap over here. So I'll count that as resistant. All right, 412.8, 413.6, 415.5 are my resistance level with a previous pivot high back on May 1st at 417.6. Those are resistant levels. So hopefully if the market makes a bullish decision tomorrow, it'll take out those resistant level and give us some tradable moves. All right. Now that's the bull case scenario. Now as far as the bearish case scenario go, bearish case scenario, I still got this trend line from March 13th low connecting the May 4th low. All right. Breakdown level is for tomorrow is 409.5, very close to our 410 critical 410 support level. We can count that as support zone. 409.5 to 410. We know how critical this zone is, okay? So if you're a bear and SPY break down those support level, that support zone definitely look too short. I got the 23.6 fib level at 408.85. We had a couple bounces off that level, okay? The grandmother's candle was at 49.7 cents. Okay, very close to that 23.6 fib level. But overall, that's where we want to short. We want to be bullish below 49.5 and 408.8. I mean, excuse me, not bullish, bearish. We want to be bearish below 49.5 and 408.8. All right. There's actually a gap. We got a gap right there. All right, May 4th candle to May 5th candle. Okay, the gap fill is at 407-ish. Okay, so if we lose 408.8, let's see if we can go fill that gap at 407. All right, there's some support at 405.7. There's another gap at 404. Lots of gaps below, and another gap around 401-ish. Okay, so guys, I know the market's been tough to trade lately. It's been tough to trade lately. 2022 was much better, right? We had a lot of volatility. We had a lot of tradable moves, okay? But we gotta stay disciplined. The market makers are gonna play tricks on us, all right? And they're gonna switch it up on us. Someday they're gonna be trendy. Someday they're gonna be choppy to the bull side, to the bear side. But we gotta remember our trading plan, know the levels, know the setups, and trade it unbiasedly. Okay, we gotta stay sheeps no matter what, and remember our training. Stick to what we learn and remember our training. Stick to the price action, and don't be greedy. Okay, don't be greedy. Play it level to level. If you believe in the move and you think we're gonna get more of the move, leave some runners. If you want to swing the runners. Level to level is one of the safest style of trading. You know, it's not a perfect trading style. There's no 100% in the stock market. You must understand when you trade the stock market, there are risks. Nothing is 100%. So you must have stop losses. And you must never take on risks that you're not willing to take on. Okay? So we'll move on to triple Q here. I didn't show this in yesterday's chart, but I'm showing it in today's chart. We got a nice rising wedge. Got a nice rising wedge here. All right. Breakout level for today was 327. 327.3 will be the breakout level for tomorrow. It's above that in the after hour, but a lot can change. A lot can change during the overnight and during the pre-market as well, okay? But overall, above 327.3 would be breakout level of this rising wedge. Okay, I had a gap fill level at 329. Triple Q got to 328.9. Few cents shy of the level. Okay, a few cents shy of the level. So if it can break up above 327.3 or stay above it as it is right now, I need to see the breakout of 329 to continue more upside to 321.5ish, and 334 would be my next levels. Okay, now if we get a rejection from here or a false breakout, definitely look to short if it's a false breakout. But I'd like to see support fail, starting with if 327 fail, well, it doesn't clear or it drops back below. Watch 325, 324 support level with 322.5 below. That 322.5 is support of the rising wedge. So below 322.5, I would definitely be bear bias on the triple Q with 321, 319, and 317.5-ish in play. And below that would be 315-ish, okay? Previous pivot low, all right? IWM is looking kind of bearish, but we'll see what happens. Didn't quite break down the chop range level, support level. All right, I had it at 172. It closed right around there, a few cents off but it has to give us that close below 172 to look bearish, to put 170 and 168.7 and 167.4 in play, okay? If it bounced from here, there is resistance at 173-ish, testing it now in the aftermarket, but if above 173, watch that breakout at 175. That's the 23.6 fib level. Above 175, I'd be bullish on IWM. Tesla, choppy day on Tesla, but I have my fib levels here from April 27th low to May 12th high. All right, we got a double bottom here at the 50% fib level, which was at 164.5, and it closed just above my 166 support level. Okay, we had a bunch of tests of that as buying pressure and tested as resistance as well. Okay, now the 38.2 fib level is at 167.5. If Tesla can stay above 166.6, look to long above 167.5 with 170 to 169.5 zone in play, 171.3, and then 174 would be back in play. Okay, now to be bearish, it needs to open or get below 166.6 and break down 164.5 to cancel that double bottom and trigger more downside with 161.5, 159, and 157-ish in play. Okay, Apple still consolidating, still doing nothing. You can try a long above 173 or longs above 174.5 to put 176 and 178.5 in play. Or if it breaks down 171 and then this yellow trend line supports at 170. So 170 to 171 zone is support zone. If it breaks that down, you guys can look to short. Hopefully we get some price movement. The market cannot chop forever. There's a very long history of the market not chopping forever. In fact, it trends a lot of time. And 2023 has been pretty tough to trade compared to previous years, but it's still tradable in my opinion. It just requires a lot more patience. So that's the setup. 170 to 171 zone, below it bearish. You can long above 173 or 174.5. Okay, DXY looking like it's basing. I got some new fib levels here from March 8th high to April 2023 low. 38.2 fib levels at 102.734. Basing just below it. If it can clear, look to long. 103.3, 103.9, and 104.7 would be in play. All right. Support, critical supports at 101.9. That's the 23.6 fib level. If that fails, that's bearish with 100.7 back in play. Okay. VIX overall still chopping. I need to see it clear 18.5 to put 19 in play. That's a 23.6 fib level. Above 19 would be a little more bullish. All right, this low right here back on May 11th, May 12th could be a higher low, but it'll need to clear 19 and clear 21.3. Okay, that's the VIX. As long as below 19, I won't take any movement serious on the VIX. Okay, now here is the dark pool. Not much action in the dark pool. Nothing over $1 billion. The most activity we got at a level was at 412.89. All right, but nothing over $1 billion. Okay, here's the SPY filter for 500K premiums or above. Overall bearish 83%. If we look at shorter term expiration date 1 month out, overall is bearish as well. This is a pretty aggressive play here. 391 strike price for SPY June 2nd. Somebody's very bearish on SPY for the short term. Looking at QQQ. Okay, filter for 500K premiums or above for expiration date 1 month out. Everything all in puts. This is a block order though, over 8,000 in size. 290 strike price. Okay, so big money is bearish in the short term 1 month out. IWM overall bearish in the short term as well. This is a block order, 177 strike price and calls. Almost 10,000 in size, but overall more contracts went for puts. Okay, Tesla and overall bearish 89%. Let me take off the expiration date. Look at all of them. Yeah, still overall bearish. And Apple, 100% in the puts. Yeah, it's not much contract went in for Apple. Yeah, nothing. Yeah, not much contract for Apple. And the VIX. All right, 100% into puts. Calls, excuse me. All right, guys. So I hope you guys found value in Uncle Charter's video, and I really hope that the market give us some moves tomorrow. We got the double inside day candle setup on SPY. Hopefully that the setup plays out with the fourth day making a decision. Okay, so good luck tomorrow, guys. Peace.